Hello, welcome to our classes. I'm Dr. K.K. Misra. This video tutorial is on multiple choice questions on business finance. This is part first. Here I will be covering the questions with brief explanation. Now come to the questions. Question 1. Which of the following is a series of constant cash flows that occur at the end of each period for some fixed number of periods? Options are A. Ordinary annuity, B. Annuity due, C. Perpetuity, D. None. Correct option is A. Ordinary annuity. Question number 2. During the accounting period, sales revenue is say rupees 25,000 and accounts receivable increases by rupees 8,000. What will be the amount of cash received from customers for the period? Here correct option will be C. Rupees 17,000. Amount of cash received is actually is equal to total revenue increased minus account receivable increased. So if you calculate, you will find it to be rupees 17,000. Question number 3. The conflict of interest between stockholders and management is known as A. Agency problem, B. Interest conflict, C. Management conflict, D. Agency cost. Here correct option is A. Agency problem. Question number 4. Which of the following form of business organization is least regulated? A. Sole proprietorship, B. General partnership, C. Limited partnership, D. Corporation. Correct option is A. Sole proprietorship. 5. Which of the following ratios are intended to address the firm's financial leverage? A. Liquidity ratios, B. Long-term solvency ratios, C. Asset management ratios, or D. Profitability ratios. The correct option is B. Long-term solvency ratios. Actually, these long-term solvency ratios are intended to address the firm's long-term ability to meet its obligation or its financial leverage. Now, question number 6. Balance sheet is based upon which of the following formula? The correct option is D. Assets is equal to liabilities plus stockholders' equity. Question number 7. Quick ratio is also known as A. Current ratio, B. Acid test ratio, C. Cash ratio, D. None. Correct option is B. Acid test ratio. A. Which of the following is a special case of annuity where the stream of cash flows continues forever? A. Ordinary annuity, B. Special annuity, C. Annuity due, D. Perpetuity. Correct option is D. Perpetuity. 9. Which of the following ratios are particularly interesting to short-term creditors? A. Liquidity ratios, B. Long-term solvency ratios, C. Profitability ratios, or D. Market value ratios. The correct option is A. Liquidity ratios. 10. AST company say has a current ratio of 4:3. Current liabilities reported by company are rupees 30,000. What would be the net working capital for the company? If you calculate, here you will find C as rupees 10,000 to be the correct option. Actually, you know that current ratio is equal to current assets upon current liabilities. Mind it that ratio is given 4:3. If you presume to be current assets say as X, and if you calculate on your own, then 4:3 is equal to X upon 30,000. If 1/3 of 100% is 30,000, then obviously if you apply, you will find it to be 10,000. Now, question number 11. In which form of business owners have limited liability? A. Sole proprietorship, B. Partnership, C. Joint stock company, or D. None of the above. The correct option is C. Joint stock company. Actually, shareholders of a company have the liability up to the number of shares purchased or amount invested only. Now, question number 12. Which of the following item provides important function of shielding part of income from taxes? A. Inventory, B. Supplies, C. Machinery, D. Depreciation. The correct option is D. Depreciation. Depreciation actually expenses are deducted from net income for tax purpose. 13. The process of determining the present value of a payment or a stream of payments that is to be received in the future is known as A. Discounting, B. Compounding, C. Factorization, D. None. The correct option is A. discounting. Actually, future value is discounted back at the given interest rate to find out the current worth of the amount to be received in future. Now, question number 14. Here, you need rupees 10,000 to buy a new television. If you have rupees 6,000 to invest at 5% compounded annually, how long will you have to wait to buy the television? So, if you calculate, here you will find B to be the correct answer, 10.51 years. Using financial calculator, put, say for example, PB is equal to 6,000, rate 5% interest, FV 10,000, and solve for NPER. You will find it to be close to 10.47. So that is very close to 10.51. Now question number 50. Which of the following equation is known as cash flow or CF identity? Here correct option is D. CF from assets is equal to CF to creditors plus CF to stockholders. It's accounting equation actually. Assets is equal to liability plus equity. Now question number 16. In which of the following type of annuity cash flows occur at beginning of each period? Options are, say, A. Ordinary annuity, B. Annuity due, C. Perpetuity, D. None of the above. Here correct option is A. Ordinary annuity. Actually, annuity due is paid at the end of year. That is why it's called annuity due. Now, question number 17. Between the two identical bonds having different maturity periods, the price of the dash bond will change less than that of dash bond. Here correct option is B. Short term, long term. Actually, the longer the time to maturity, all else being equal, increases duration. Higher duration is equal to higher sensitivity to interest rate changes. This is why interest rates higher is equal to price lower. Now, question number, which of the given area is not addressed by business finance? Say A. Financing, B. Investing, C. Managing day-to-day expenses, D. None. Actually, here all of the given areas are addressed by business finance. Question number 19. Which of the following form of business organization is least regulated? A. Sole proprietorship, B. General partnership, C. Limited partnership, or D. Corporation. Here correct option is A. Sole proprietorship. Actually, they don't have any obligation to be regulated according to business laws. Now, question number 20. Which of the following is measured by profit margin? A. Operating efficiency, B. Asset use efficiency, C. Financial policy, or D. Dividend policy. The correct option is A. Operating efficiency. Actually, profit margin ratio is calculated to determine how efficiently the business is generating cash from operations. Now, question number 21. A company having a current ratio of 1 will have dash net working capital. The correct option is actually 0. Here, net working capital is actually current assets minus current liabilities, CA minus CL. If current ratio is 1:1, what does it mean? It means that assets are equal to liabilities. Hence, net working capital obviously will be 0. Isn't it interesting to you? Now, question number 22. Business finance addresses which of the following? A. Capital budgeting, B. Capital structure, C. Working capital management, D. All of the above. Here, correct option is D. All of the given options. Now, question number 23. In this type of business, all owners share in gains and losses and all have unlimited liability for all business debts. A. Sole proprietorship, B. General partnership, C. Limited partnership, or D. Corporation. The correct option is in fact B. General partnership. Now, question number 24. Which of the following is measured by retention ratio? A. Operating efficiency, B. Asset use efficiency. C. Financial policy. Or D. Dividend policy. The correct option is D. Dividend policy. Actually, retention ratio determines how much amount of net income is retained for reinvestment and how much is paid as dividend. Now, question number 25. How many years will it take to pay off a rupees 11,000 loan with a rupees 1,241.08 annual payment and a 5% interest? So here in question number 25, correct option is actually not highlighted. If you calculate, you will find it to be B, 12 years. Using financial calculator in an Excel, put PB is equal to 11,000, PMT is 1,241.08 and rate of interest 5%. Solve, you will find it to be 12 years. 26. Which one of the following terms refers to the risk arises for bond owners from fluctuating interest rates? A. Fluctuations risk. B. Interest rate risk. C. Real time risk. Or D. Inflation risk. The correct option is B. Interest rate risk. 27. Which of the following ratios relates the market price of the firm's common stock to selected financial statement items? So here if you compare, you will find D as correct option, market values ratios. Actually, market values ratios determine the market price of or fair value of the common stock of company and compare it with items of balance sheet like shareholders equity, etc. Now 28. If a firm uses cash to purchase inventory, its quick ratio will A. Increase, or B. Decrease, or C. Remain unaffected, or D. Become zero. Actually, correct option is B. Decrease. Here what happens is that when inventory is purchased for cash, cash is converted into inventories and there is no effect on net current assets. The current assets remain the same as before the purchase of inventory. The current ratio will not be changed. Quick ratio, however, will be reduced if the cash is converted into inventories, because while computing quick ratio, inventories are not added but cash is included in quick assets. As quick assets upon current liabilities, quick assets is equal to current assets minus current liabilities. So this was the explanation for this particular question. Now question number 30, here 29. Standard Corporation sold fully depreciated equipment for say rupees 5,000. This transaction will be reported on the cash flow statement. Options are operating activity, B. Investing activity, C. Financing activity, or D. None. The correct option is B. Investing activity. Here investing activities, that refers to changes in investment and long-term assets. Cash flows from sale of property, plant and equipment, from sale of investment in debt or equity, security of other entities, from collection of principal on loans to other entities. Cash flows to purchase property, plant and equipment, to purchase investment in debt or equity security of other entities, and to make loans to other entities. Now question number 30. Which of the following ratios are particularly interesting to short-term creditors? So here correct option is A. Liquidity ratios. So this was all about this particular video tutorial. I hope that you have liked it, and if you have liked it, please do not forget to subscribe my YouTube channel R Classes and press the bell button and pass on to others, those who are needy now and in the future. Please like, share and subscribe. Thank you very much. Have a nice time. Best of luck.